Right, so SoFi stock just reported earnings this morning before the market opened, and before this earnings, the stock was down since July 31st, almost 40%. So going into this earnings, we already had a heavily depressed stock price. That doesn't change the fact that SoFi is up year to date 54% so far. So it's still been an insane year for SoFi stock, but going into the earnings, the stock had fallen so much in the past few months leading up to it that any good news, I expected there to be a huge pop in the share price. So what happened with the share price in the short term? On the day, we popped up to about high sevens. I saw $7.70 at one point, and now as of the close, we're sitting at $6.94, which is up about 1%, and then down just a teeny tiny bit in the after hours as of recording this video. So pretty much flat on the day. So what you might think is, yeah, SoFi might have had a not so great earnings report. Maybe they missed a few numbers. Maybe they beat on a few numbers, missed a few numbers. Maybe they came in line with most things. That's what you might think. But actually, it was beat after beat after beat after beat. And there's some really important things in here that are very, very different than the Q2 earnings that we saw just 3 months ago. And of course, extremely different than 1 year ago. So SoFi has put themselves in quite the position of power and quite the position of strength. That's what we're going to get into in this video. But first, if you're new here, I'm Austin. I'm a co-owner of cloudmusictweet.com. I'm also a stock market investor. And for sure, most importantly for this video, I'm a SoFi shareholder. If you saw my last video, I actually talked about my exact allocation with SoFi, but it is quite a large holding for me. I'm going to talk about whether or not I'm picking up more shares right now or what prices I would really like to see SoFi go for me to step in and be a big time buyer again. If you want to hear more about SoFi and many other stocks and opportunities in the market, consider joining us in the Patreon. And if you're not subscribed to the YouTube channel already, be one of those 2,300 something subscribers. I'm not sure exactly where we'll be when I post this video, but as a thank you for doing all that, here's a picture of all my animals. And someone got really offended that I was showing people my animals on YouTube. So here's a few pictures of them. Penny, Millie, and Luna. Millie and Luna are the cats. Penny's the dog. I appreciate you so much. Thank you. Hope you enjoyed that. All right, let's get into it. Another record quarter for SoFi in Q3 of 2023. Let's go through the numbers. Let's dive right into it. Record revenue once again of $537 million on a GAAP basis and $531 million on an adjusted basis. Both of those figures are up 27% year over year. I would have liked to see something in the 30s, but let's be real. 27% revenue growth is still absolutely sick when we have tons and tons of companies left and right throughout this earnings season that are missing on revenue, that are missing on EPS, that are missing on EBITDA, etc. So to see SoFi not only beat on their revenue expectations, but still be growing in the high 20%, very impressive. I love to see that. And then check out this next headline number here. Record adjusted EBITDA of $98 million. Look at this. Up 121% year on year. We are seeing it happen in front of our eyes. SoFi is about to switch from being a money-losing company to a money-making machine on the bottom line. Typically, when we see this process play out, stocks get a lot of respect from the market because, as we all know, tons of people will never, ever touch an unprofitable company. So once SoFi gets to those profitable numbers, profitable quarters regularly, we're going to have a much larger shareholder base that's going to consider going into SoFi. Because now, not only is it just a hyper growth company, but it's going to be a hyper growth company that also has extremely impressive earnings numbers that are expanding probably faster than the net revenue number is going to be expanding. Speaking of earnings, on an earnings per share basis, we're inching closer and closer to being EPS positive. On a GAAP basis, they had a goodwill impairment, so the GAAP loss was negative 29 cents. On an adjusted basis, when they take out that goodwill impairment, negative 3 cents of EPS. Total SoFi members up 47% year over year. Total new product adds up 45% year over year. Total deposit growth of $2.9 billion. That is well above their goal of $2 billion of total deposit growth each and every quarter. And that's up 23%, $68 million of growth in tangible book value. And management raised full year 2023 guidance. Absolutely insane in the environment that we have right now in the economy and the financial sector in general for them to be not only beating on all their Q3 numbers, but raising 2023 guidance. I want to dive into exactly what they said on the guidance numbers because I think it's really important to get our heads around what we can see potentially in Q4. The management team says for full year 2023, they expect adjusted net revenue of $2.045 to $2.065 billion, and that's up from the prior guidance of $1.974 to $2.034 billion. The midpoint of the new range is higher than the high end of the old range, so that's great, very impressive. Full year adjusted EBITDA, listen to this, goodness gracious. Now they're expecting 386 to 396 million, up from 333 to 343 million dollars, representing a 48% adjusted EBITDA margin. Very impressive. And probably most importantly of this whole guidance conversation is that they're staying strong on the story that they're going to reach profitability on a GAAP basis on the EPS numbers in Q4 of 2023. Did mention that depreciation, amortization, and share-based compensation expense is going to rise as a result of trying to hit that number and flip to profits. But to be honest, I think it's a necessary evil that they're going to have to take in order to go ahead and flip to profits, deliver to shareholders what they had already said they were going to do. So I'm certainly not mad about it. I'm glad they're prioritizing those GAAP EPS numbers. Let's move into members and products. Members are at an all-time high. Products are at an all-time high. Products inside of different segments, the two different segments, lending and financial services, both individually at all-time high. And then what to me is one of the most important things, actually I think it's the second most important thing in this entire earnings call, was the technology platform connected accounts. I made a video about 2 weeks ago where I said, I want to see new all-time high in total connected accounts on the technology platform side. That's what we got in Q3 of 2023. We went up from 129 million all the way to 137 million connected accounts on the technology platform. Very, very, very good. I remain a happy shareholder, and this gets me bullish, even more bullish than those revenue numbers, even more bullish than getting the EPS to -3 and getting closer to profitability. This gets me really bullish, and something else that I'm going to talk about here in just a sec makes me even more excited. This new all-time high in total technology platform connected accounts is definitely proof that the goal is working. The goal from the management team, and Anthony Noto, the CEO in particular, said they're going after larger, more durable clients on the tech platform, and the tech platform was going to take a short-term hit as a result. I got a little nervous. I wanted to make sure that they could actually procure those larger and more durable clients. This is definitely proof. As long as they can keep this going, tech platform is going to be in an insanely good spot. Let's talk about the next thing on the technology platform. Contributable profit from the technology platform was absolutely sick. Before I talk about what happened in Q3 with contributable profit numbers from the tech platform, let me just remind us what happened in Q2. Q2 of 2023, I was really worried and frustrated that the contributable profit from the tech platform had actually dropped on a year-over-year basis from Q2 of 2022 to Q2 of 2023 by 21%, all the way down to $17 million. Now we look at Q3 of 2023, and that number, the contributable profit number, almost doubled in 1 quarter's time. $32 million. And on a year-over-year basis from Q3 of 2022 to Q3 of 2023, that's a 65% increase. That's the number that we want to see. That's what I'm talking about. If the tech platform's going to be the AWS of fintech, and it's really going to pull SoFi into that upper echelon of stocks that not only have insane revenue growth, but have ridiculous net income numbers, the tech platform can take them to those places over time if they prioritize it and they run it the right way. This right here is proof of concept that Anthony Noto's idea of going after larger, more durable clients is absolutely the way to go. And I can't wait to see the results as we move through the next few quarters. Q4 2023, Q1, Q2, Q3 of 2024, going to be absolutely sick. And I think the net income numbers are going to get disgustingly ridiculous as it relates to net income growth. Mostly going to be due to the technology platform. Definitely won't be the only thing pulling them to those net income numbers and that crazy net income growth, because look at this. Contributable loss 1 year ago from the financial services segment was over $52 million. And the year-on-year change is like not measurable. It's that ridiculous. Right now, Q3 of 2023, $3.2 million of contributable profit from the financial services segment. That's crazy. I don't think that's going to slow down in Q4, Q1 of 2024, etc. So we're just going to keep on seeing that crazy growth and the contributable profit from the technology platform crazy growth. Can't wait to see it. They are certainly on their way to turning that profitability corner. Very, very impressive in these financial times and these tight financial conditions we have with the 5.5% Fed funds rate. One more thing I do want to talk about, I don't want to spend a lot of time on it because it's pretty obvious, right? Student loans came back. First payment, I believe, is supposed to be in October for almost all people's federal student loans. So as a result, a lot of people were refinancing their student loans to try to get a lower payment, to try to get a better rate, etc. SoFi is one of the leaders in that space, and as a result, on a year-over-year basis, they had a 100% increase in student loan origination volumes. I don't even think that's going to be the biggest wave of origination from the refinancing. I think Q4 of 2023 is going to be a bigger wave. We'll have to see how all that plays out, but I would bet we're going to see somewhere around $1 billion of refinances of student loans in Q4, if I'm right on that. Just another thing to help them out. It definitely helped them in a big way in Q3, and I think it's going to be one of the things that pulls them to those GAAP profit numbers in Q4 of 2023. So what am I doing with my shares? Am I selling out because I hated these earnings? Am I buying more because I loved these earnings? For now, for sure, I'm absolutely holding all of my shares. Prior to this earnings, my buy range would be the high fives, like $5.85 and all the way up to $6. Now, I'm actually more bullish by just a little bit. I would start nibbling in a very small way, buying a few shares here and there if we hit the low sixes, $6.05, $6.10, $6.15, etc. If we hit those numbers, I'm going to start buying more shares. Like I said, in a pretty small way, because one, they're still unprofitable. Yes, they're turning that profitability corner, but they are unprofitable. And number two, much bigger reason, I have a lot of shares. This is a very large portion of my portfolio. If you saw my last video, you know what I'm talking about. You know the specific number that I'm talking about. But it is a large holding for me. I don't need to go out there and increase my exposure to SoFi in a crazy way, but I would buy a small amount of shares around the low sixes. High fives, I'd buy a little bit heavier. Low fives, I'd be starting to consider buying some big blocks of shares. If, dare I say, we drop into the fours, I'm gonna have to pick up more shares. I don't wanna be reckless about it, but if we drop into the fours and there's no big fundamental change in the business model and we're still seeing continued growth and continued strength in all the metrics that I care about, I'm gonna have to pick up shares in a pretty big way if we drop into the fours, all right? I wanna know what you're doing out there. Did you think this earnings was really good, kinda good, just neutral, bad, really bad? I wanna hear about it, and definitely wanna hear if you're holding SoFi shares, buying more, selling your SoFi shares, etc. Did this earnings change your mind in any kind of way? Did it make you more bullish, more bearish, slightly more bearish, slightly more bullish? Definitely want to hear about it. One of my favorite parts of posting here is checking out your comments in the comments section. I appreciate you for being here in a major way. Thank you so much. Have a great night.